The great geographic arbitrage, we spoke about it yesterday. I want to reiterate the argument today. I think it's a great argument. I think it's a very important argument, and it's going to be guiding our investments for the forthcoming future. The purpose of this podcast is to give people a feel for what it looks like to run a hedge fund, what the daily procedures are, what the idea generation is, the creativity. That's very important. The positioning, all these pieces of the value chain need to work well in order to make money and generate wealth. And I hope we are getting closer in fulfilling our mission to generate wealth by investing in fundamentally new concepts and engineering practices with large impact. This is a Not Even Wrong podcast. It's January 8, 2021. This is Krim Delco. For the day, the fund is up 8.5%. The market's up 50 basis points. For the year, we're up 29.5%. The market is up roughly 1.7%. So we're outperforming by close to 28% in the first week of January. Now, the great geographic arbitrage, the big movement, the big development that we've spoken about yesterday is, in our view, going to be the main driver of money-making opportunities, at least on the macro scale. Macro and micro are highly intertwined. I want to talk about this a little bit. I want to then go back to the explanation of why we believe the great geographic arbitrage is going to be a big driver for asset prices. And then I want to talk a little bit about the positioning of ourselves and why we choose to position ourselves the way we position ourselves. So let's talk about macro and micro. Macro and micro these are words that have a lot of meaning for different people, and I just want to clarify what it means for us. The micro is the businesses, the idea that we build upon the principal stack, developing a thesis for companies that we think will be wealth-generating companies, such as, for example, Tesla. So the concepts here, the ideas, the engineering practices, the technologies are almost independent of politics, currency markets, interest rates, and those sort of things. And that leads me to the macro side. The macro side is the exact opposite. So the macro side is sort of the overall environment in which you embed your companies, and that's all these things like interest rates, politics, trade wars, trade policies, all these things all can be wrapped up into the macro side. The macro side is also what the Fed is doing, again, what interest rates are doing, the cost of capital, demand and supply for assets, demand and supply for capital, capital defined as money that doesn't need to be spent right now and therefore is available for investment. So all these things fall into the macro side of things. And we don't spend a lot of time talking about macro primarily because we don't have a need for that. But sometimes when a good idea pops up, when a good creative implementation of thought that we have to the macro side of things, sometimes when that happens and we have money-making opportunities in the market, then we start getting interested. And just a little caveat here, we actually started as a macro hedge fund. So we were looking at relative value. We were trying to make money with commodities, oil futures, interest rates, currencies, and we've been pretty successful at that. But then we switched towards wealth generation through fundamentally new concepts and engineering practices, which is just another word for disruption, because that is the wealth generating asset class, at least of this generation of fund managers, and we're happy to be part of that. Now, we believe that there is a potential for a clash of two forces. One, the macro force, and the other, the disruption force, and therefore a proliferation of even much higher returns than we thought were possible before. Why is that? We believe that the great geographic arbitrage that is happening in the United States will make the United States look a little bit like Germany after the reunification. You have a very, very highly developed West Germany, which is merging with East Germany and creating a massive arbitrage of the cost of living, cost of labor, cost of healthcare, cost of everything. While the costs were very high in the West, they were very low in the East, and the arbitrage, which is still going on, has made Germany a low-cost country for a long time, made Germany unbelievably competitive. And despite dysfunctional politics, despite corruption, despite many other things that plague Germany the same way they plague any other developed industrial nation, Germany is and has been able to proliferate themselves to the top of the economic echelon, maybe with a few exceptions, such as Silicon Valley and China, certain pockets of China. Germany has been very successful, and in our view, the main contribution has been this arbitrage that happened between East and West Germany. We believe that something similar is happening right now in the United States, and driven by the dislocation of talent from the coasts towards the inland, in particular states like Texas, Nevada, Utah, and Florida. There's other examples, maybe like Tennessee, but I think the big one is Texas. And what's happening here in a nutshell is there is an arbitrage of cost of living. You can live on the coast in San Francisco, and you can live in Dallas, Texas, or Austin, Texas, and your cost of living, I would say, are probably 50%. So Dallas, Texas, Austin, 50% of San Francisco, while the productivity, the output that you can achieve in Texas is the same. So that is an arbitrage that has been possible before. It's not completely new, but now with COVID and the remote work revolution and the cultural shift of remote work, which is even more important, is really driving this arbitrage. And what's that going to do is it's going to create moderate inflation, if not even no inflation, for many years in the United States. Despite all the money printing, despite all the Treasury, Janet Yellen, Treasury Secretary, throwing money at people, and all these narratives that are dominating financial markets these days, basically, in a nutshell, the narrative is that the Democratic Congress and White House will be throwing money left and right. Now, we have two objections to the thesis that because of the Democratic dominance in Washington and money printing Fed and the COVID crisis, because of that, the dollar is doomed and the US will go into rapid inflation. We have a contrarian thesis here, which is saying that no, the Washington establishment will not destroy the dollar. The Washington establishment will be very, very helpful for businesses, actually, particularly innovative, disruptive businesses. It might not be as good for the established types of businesses like oil industry, tobacco, and all that stuff, but for the actual upward mobility driving new innovating businesses, it will be good. We will explain why. And second, we believe that the great geographic arbitrage will take away inflationary pressures from the economy, and despite all the money printing, that we will not have rapid inflation. In fact, we will have modest inflation. And let me explain first why I think that the Washington establishment is not going to just throw money and destroy the economy and whatever people are saying. There's a couple of reasons. Number one, the Democrats don't have a history of doing that, period. But number two, even more importantly, it is conceivable that they actually believe in their story, that they actually believe in the concept of upward mobility, of maybe not equity, that's a little extreme, but equal opportunity and all these things which are at the core of democratic administrations, of democratic thought. If you really follow through, what you should do as a president, as a decision maker, is create an environment where disruptive technologies are enabled, because that's the most equalizing factor. If Tesla can make a really good car for $40,000, a car that at similar quality used to be $100,000, that is more equity and equality than you could ever imagine any way other delivered. I think this goes back to something Charlie Munger said many years ago, which is the best charity he's ever done is invest in Costco, because Costco has relentlessly driven down price and increased quality, and therefore increased the lives of many Americans. This is the gist of this argument, and I believe that the Democrats either implicitly or explicitly actually follow that premise. Versus the Republicans, if you really boil it down to the nitty-gritty, Republicans are about crony capitalism and about keeping the establishment afloat and trying to keep competition away from the establishment. So if you take those two, and it's been very much like that during the Clinton administration, during the Obama administration, Bush administration, Trump was a little different. In fact, partly maybe that's why he lost this election, is because he has not helped the establishment at all. He has enabled enormous innovation because he has not been a typical Republican president in that sense. So to summarize, the one argument that is often made, which is that the Democratic-controlled Congress and White House will be splurging and wasting money, we refute that. We don't believe that this is part of the ideology of the Democrats. It is not part of the ideology of the people in place, such as Biden and Harris. It is not part of the ideology of the people in Congress that have power. So we don't think that this will happen. Now, the second argument is that no matter what, we have all this money printing and it's just going to create inflation. We believe that the great geographic arbitrage will counter-fight that in a way that not just that we won't see the kind of inflation that everybody is afraid of. We believe that it will even lead to much, much lower inflation, or a decent inflation, so maybe 2-3%, but much, much more growth. The inflation conversation is always a relative conversation. If you have nominal growth of 6% and inflation of 3%, you're growing 3% in real terms. That is amazing growth. You can have 2% inflation and 1% growth, and that is a disaster, because then you have negative 1% real growth. So it depends how you calibrate growth and inflation when you talk about inflation. So what I'm talking about here, what I call robust growth, is moderate inflation with high nominal growth. This is what we are targeting, or in other words, real growth. Real growth, and you could have, for a while, a mispricing of the treasury market, because the treasury market is pricing 2% inflation for the next 30 years in the 30-year treasury. Now, it is possible that we could have a 2% inflation, so the treasury market could be correct on that one, but like I said, we could have 6% nominal growth. And if we have a 4% real growth for the next 5 to 8 years, 10 years, that is enormous value, which is going to be channeled in particular into the stock market, in particular into stocks that have fundamentally new concepts and engineering practices with large impact. Tesla and the genomic stocks are a good example of that. And I can talk about some other ideas a bit later, but I want to get back to the concept of the great economic arbitrage, the great geographic arbitrage. Why is it happening? It is happening because the cost of living on the coasts are very high. The cost of living in the inland are relatively low. This arbitrage will create enormous productivity boost, because productivity is defined as how much do I have to pay to create a certain unit of output. And if my cost of living go down by, let's say, 40%, and my output is the same, I'm increasing my productivity by 40%, and we will see a massive productivity increase in the United States in the next 5 to 8 to 10 years. We will see massive growth through innovation that we already have, but we will have even more of that. And that is partly also because technologies are ripe. We have entrepreneurs that are able to harness them, such as Elon Musk, and companies that are built around these technologies, such as Tesla, SpaceX. We have Apple, we have Square, we have Facebook. We have companies that are built into this, what I call the age of disruption. So they are not just able to harness fundamentally new concepts and technologies, they're also able to proliferate them and continue growing with them, which is very important. Maybe that's the difference between today and 50 years ago. We always had disruption. The railway was a disruption, the oil industry was a disruption, but then people didn't know how to grow with that. They just became crony capitalists after a while. We believe that there's a new culture of entrepreneurs, a new culture of companies that are able to harness this disruption and this ability to keep growing with even bigger and bigger size. That's why it's conceivable that we will see trillion-dollar companies much more often, and high trillion-dollar number companies much more often than before. So back to the great geographic arbitrage. The great geographic arbitrage is creating a massive productivity boost, which will generate real growth. This is the fundamental thesis that we have for the next coming years. at least for the next couple of years during the Biden administration. We believe that these trends usually take a long time, 6 to 8, 10 years. We believe that this is enormously positive for the technology part of the stock market. I'm not saying that you can blindly invest in the S&P 500 here. A lot of companies depend on inflation. A lot of companies are either neutral towards productivity or even anti-productivity. So it's not so clear how you can make money with this blindly. You still have to do your work. You still have to pick the right sectors and the right technologies and the right companies and have the right sizing. All these things still matter. You cannot forego them, but at least it's making it a little bit easier to have the wind in your sails. And we believe that the great geographic arbitrage combined with this new administration will have a lot of wind in their sails. Now, what are the trades? Our portfolio is highly concentrated on Tesla and on the CRISPR index, which are companies that are harnessing the power of genome editing, of cell engineering, and synthetic biology. Those are the main positions that we have right now. We believe that one sector that we're very excited about is quantum computing. There is a lot of things going on in that space, so it's not completely dead. Of course, there's a lot of venture capital going into the space. However, we still believe that the quantum computing space is a way, has still, has still some steps to make until it gets to an investable asset class according to our criteria. What I mean with that is that we have, for example, a lot of venture capital is going into companies that call themselves quantum computing companies, but in a sense are either quantum sensing companies or quantum cryptography companies, which are not exactly the same thing. And those are the first applications that have commercial value. We've spoken about this in the past. We've also followed companies and had contacts with companies like that, such as the companies that we've spoken about 2-3 years ago when we were looking at quantum cryptography and those types of things. Those are interesting ideas, but not interesting for us right now, not interesting to invest in. We tend to stay away from cryptography as an investment theme. But again, it's worth looking at. I think when the question is, when does the rubber hit the road? When is the sector ready for us to be invested in? We can take two examples. One is the CRISPR side. CRISPR is a concept, a little bit like quantum computing, a new technology, a new concept, a new engineering practice, which proliferates throughout academia and then gets to the business side. On the quantum computing side, we don't have that yet. So we don't have engineering practices which proliferate throughout academia. We have lots of try and error still. So we're still in that try and error situation. But we believe that there is a good chance that maybe in the next 3 to 4 years, certain concepts converge towards, let's say, a certain hardware which enables quantum computers that enable the application of quantum algorithms to solve certain problems. And then it becomes interesting that we could see maybe advances in material science. We could see much faster iteration for companies like Tesla and SpaceX, and then maybe also certain companies which come out of the quantum computing space that become investable. This is me conjecturing here how this could pan out. Right now, we're not there yet. As I said, I'm just trying to give an example of how the next wave of wealth generation could come upon us from a new side, which is quantum computing. What we have right now, again, is CRISPR. We have electric intelligent cars, which is basically encompasses what Tesla is doing. We are also very interested in SpaceX and interplanetary travel. Not investable right now, but we will invest in SpaceX sooner or later, either through private placement or hopefully when they go public. I've spoken about this also, that I believe SpaceX should go public as soon as possible for transparency reasons, for financing reasons, and employees and having a liquid stock and things like that. There's all other areas and sectors that are interesting: cryptocurrencies, blockchain, not interesting for us, but definitely interesting from an investing / innovation disruption perspective. We just don't want to get involved in that space. And then there are things such as 3D printing, again, nothing we're interested in. We're not looking at media right now, but there are certain things in the media space that could be interesting. For example, the defragmentation of media is an interesting concept, an interesting theme. The ability of people like Joe Rogan, Lex Friedman, and Kim Kardashian to create media empires around themselves, sometimes with nothing other behind it than just whatever they are, such as Kim Kardashian. Those are interesting concepts, interesting ideas, interesting new developments. Not a lot of engineering, but disruptive and interesting. So to summarize, we are very comfortable with the macro environment. We believe the great geographic arbitrage is going to create a very benign environment in the United States. The new administration and new Congress are also going to be positive for business, particularly disruptive businesses. We have not spoken too much about the dollar. Just to summarize here also, this is very good for the dollar and will create some problems in emerging markets, and that's this topic for another episode. But most importantly, we have a very good, robust growth environment for innovative stocks in the United States, and this is where we are concentrating our assets. Thank you.